Morning, everybody. This is Tim Melvin coming to you from down here in Central Florida on a rainy day. Nice overcast day, which is giving us really crappy lighting in the office. So we don't have really good video quality this morning. I apologize for that. But anyway, the news, of course, is China, tariffs, Italy, Roseanne Barr, all the very critical stuff that's happening out there in the global economy. And as usual, as small bank stock investors, I just pretty much ignore it all and advise you guys to do the same. Now, we did just finish up 13Fs for the first quarter of the year, and I got to playing around with all the data, and I back tested what would happen. Kind of, we're coming up on the fifth anniversary of the start of the Banking on Profits product. I thought I'd check and see if, are we adding any value? Are we doing anything to benefit everybody? So what I did is I took the six top activists that buy bank stocks pretty much like we do. And you know who I'm talking about. It's PL Capital, FJ Capital, Stillwell, Sideman, Clover Partners, all those guys. And we put their stock picks in a group and put them up against our portfolio to see how we did over the last 5 years. Ta-da! We beat them. Okay, so we have actually added value over all these top bank activist investors. We've been able to kind of cherry pick, get the best of the best using my rules, paying attention to who else owned the stock, and we've outperformed them by about 20% on average over the last 5 years. Now, when we started this, or I started this, with some help from the good folks at MarketFi, I was a little bit naive about the newsletter business. I gotta tell you, I thought that if we designed a good product and we delivered outstanding returns and we stayed on top of stuff and we got you timely information, we stayed in touch with you, answered all your correspondence, I'll give myself a 90% on that. I may have missed a few over the years, but I do usually answer most of the emails and requests you guys send me. I thought if we did that and again performed really well, people would beat a path to our door. I'm here to tell you that's not how this works, okay? We've done okay. People have not beat a path to our door. I've been a little bit surprised, but I have loved doing this. We're going to make some changes to make it a little bit more marketable and profitable from this end while maintaining the profits on your end. But do me a favor, if you like the product, if you're making money, and I know you folks are making money because I've talked to some of you out there that are making tens and even hundreds of thousands of dollars from these stock picks, tell somebody, okay? Help me out, send me some referral business. So we've learned the newsletter business. The way I do it's the wrong way. We're going to find a new way. We're not going to change the quality of the stock picks and the way we approach the markets and the common sense, high margin of safety approach that we use to put together portfolios of bank stocks for subscribers. So, and we've done pretty well over the last 5 years, guys. We've outperformed the S&P 500 in a rising market by about 25% with returns comfortably up near the 17% a year level. Our bonus bank picks are well north. Those are those little baby stocks that we give you from time to time. We don't put them in the portfolio because they're very small, and we can't guarantee that everybody's going to get a position in the stock. So it wouldn't really be fair to include in the portfolio. They're averaging well north of 20% a year. Now, I guess I have to toot my own horn a little bit. Folks, 5 years, not one losing stock pick. When you go into MarketFi and you look at the performance and risk profile and all that, it says we've had 97% winning trades. That's not really correct. We've had 100% winning trades, and we've had a couple of hedges that we've allowed to run off over the years. All of our closed stock picks are up. The average rate of return on a closed pick in our portfolio is about 80% over various time frames. We've done pretty well. Tons of triple-digit winners. We've had 7 takeovers this year. I think we had 15 last year. So we're pretty good at this. We've been, messing around with the bank stocks for well over 2 decades now. We kind of know the ins and outs of it. Comfortable that we can continue to, or I can continue to perform at a very high level for you. So look, tell somebody, okay? What else do we want to do here? Oh, we do have one open position that is down. I'll mention that. Every other open position in the portfolio is up. I'm highly confident that that one that's down will actually turn into a winner because it really does need to be sold and sold pretty soon. And I think the activists are going to start getting a little edgy about that one as time continues to go forward. So anyway, that's all the hype I've got for now. Look for some changes in the way that we market this going forward. Please send referrals. Those of you that locked in a lifetime renewal price, don't worry about it. That's not going to change. Those of you looking for discounts in the future, yeah, that's not going to change either. I've talked to a lot of people in the industry, and they tell me that even at the price point of $1,000 a year for the kind of performance we've delivered, we're undercharging rather substantially. Not going to raise it, but guys, we're not lowering the price. So if you're waiting for a discount, go ahead, break out that credit card and sign up, because it's not coming. All right. So anyway, we did see Dodd-Frank reform. It's come through. It's not everything that the industry could ever dream of, but it does help. Anything that reduces compliance and regulatory costs and time is a good thing, particularly for the community banks. Now, we're going to hear some things about the Volcker rule today. They're going to loosen some of those restrictions, and you've got some of the Democrats and Elizabeth Warren running around. Oh my goodness, they're going to give the banks back the tools to blow up the world. They're not. If they were, I'd be as opposed to it as she is. I don't want to see banks able to go back into proprietary trading with FDIC-insured funds. That's not what's happening. They are going to loosen up some of the reporting and compliance requirements just to make banking a little less expensive going forward. The biggest change in there, the one that has the most benefit and meaning to us, is the raising of the significantly important financial institution limit, where all sorts of new regulatory requirements and everything else kicks in, goes from $50 billion up to $250 billion, and that brings a bunch of potential players back in to the merger and acquisition game, and that is going to trickle all the way down to the very smallest banks in the country, as bigger banks buy medium banks buy small banks, and small banks buy smaller banks. That's where we live, and it should be a huge plus for us in the balance of 2018. Now, we remain with our portfolio, what I like to call win-win buy. If growth accelerates, we win because earnings pick up, bank currency gets more attractive as takeover currency, dividends increase, buybacks go up, loan demand goes up, all wonderful things driving our stock prices higher. If we stay right where we are, well, for those mid-sized banks to be able to grow at a rate that their shareholders are going to find acceptable, you can't do that in a 2% growth economy. So that's going to kick M&A up as well. That's win-win. Ooh, but what happens if we go into one of those scary recessions? We're at 35% cash with a hedge in place, so I kind of wish it would happen so we could get some of those great bargains like we were seeing a few years ago. But that's the buy part of it. We're in a win-win buy. If growth picks up, we win. If we stay right where we are, we're certainly going to win. If things pull back and get messy and the market collapses and everything gets ugly at some point in time, and it will at some point in time, guys, trust me, it just that pretty much has to happen. No signs of it, no reason for it yet. Yes, valuations are extended, but as we've discovered over the years, valuations can stay high for an extended period of time, and we can't just react to that. We can be smart, we can keep a hedge in place, we can be really intelligent about what we buy, but neither I nor anybody else ever has been able to consistently predict stock market direction. We're going to stick with our principles, stick with our buy rules, keep a hedge in place, hold lots of cash and be disciplined, but we're not going to panic and try to time the market just because valuations are extended here. We'll stick with the game plan. So that's where we are. We're win-win buy. We try to stay in that position all the time. And for the first 5 years, we've done a damn fine job of it, I might say. Now, we have had a report on bank M&A activity, 65 announced deals so far this year. We've participated in 7 of those. Hopefully our share of the deal flow goes up during the back half of the year. Now, this is all deals, not just publicly traded deals. So some of these we never really would have had a shot at anyway. It's the third most active year for bank M&A so far this year since 1991. So we're off to a very good start. Tax reform has been passed. Bankers are a little bit more confident about the economic situation, so they're more comfortable doing deals in 2018 than I think they were in 2017, especially in the first half of the year. Rising pricing as the currency gets more acceptable. Like John Allison of Home Bank Shares said not too long ago that they were going to get back into M&A just as soon as their currency price improved. Well, it's improving, so look for some deal flows out of Home Bank Shares any day now. So we've price to book value on the deals is picking up. We just saw the Premier Community Bank of Florida. That was the highest price to book value paid in a deal in the last 3 years. So the number of deals is picking up. Deal pricing is picking up. That's fantastic news for us because we've got a ton of small deposit-rich banks that we would love to sell to the deposit-hungry mid-sized community banks that are looking to grow to the 5, 10 billion and higher mark. So doors open, having a sale, guys. Come on in, start buying. We've got some banks to sell you. So the Mid-South was the most active region, really picked up because it's been slow down here, but Louisiana and Mississippi were the most active states. Seeing some slowing in the Northeast and Mid-Atlantic again, but I don't think that's a really crowded banking market. We will see more deal activity there. So the average seller had about $588 million in assets. That's right in our wheelhouse, guys. And the average buyer had just shy of $5 billion. So that's pretty much what we've seen going on for the last several years, still going on this year. Those medium-sized sweet spot community banks looking to continue to grow by acquiring smaller banks and extending their footprint and branch network. All real positive for the Banking on Profits portfolio. Oh, now we're going to have to talk about baseball. Oh, boy. I almost don't want to do that this week. The Orioles are just so incredibly horrible. The pitching's, Dylan Bundy just had his best game of the year. He looked fantastic. Gosman looked great the other night, even though he lost. But we're not hitting. We're not fielding. We're making stupid mistakes. Not sure what's going to happen as we get close to the mid-year break. Is Buck going to go? Is Duquette going to go? I hope it's Duquette and they keep Buck because our personnel decisions have been simply horrible. I'm watching Mark Reynolds continue to hit home runs for the Washington Nationals after doing so in a few years in the National League as well. And we're blessed with Chris Davis and his sub-200 batting average. And I think he has either 3 or 4 home runs this year. That's not what you get paid $17 million a year for. Anyway, Memorial Day weekend is over. We will put the Orioles flag back up in front of the house here very shortly because I am a diehard fan. But I have to say, it's tough to watch this team play baseball. However, now we do have the Braves and the Phillies over in the National League East. We talked about them a little bit in our baseball predictions that, they had the potential to make a run. They are making one. They're writing a very interesting story. Teams are outstanding, fun to watch, young, aggressive, hungry baseball teams. Now, fan base shouldn't mind when a team goes out and loses, kind of like the Cubs and the Astros did. You trade away anything that looks like a star for as many prospects as you can get. You draft smart, very high in the draft, and build a lasting franchise. What's distressing to us Orioles fans is we didn't do that. We are the second worst team in baseball, and we actually went out and spent money adding payroll in the offseason because we thought it would make us better in 2018, and it actually, that didn't work at all. It's a horrible baseball team. But anyway, there's still fun stuff to watch. The Astros are consistently good baseball team. The Yankees and the Red Sox are everything we were afraid they were going to be. Both great teams. Milwaukee is doing exactly what I thought they were going to do. They got better last year. They got a lot better in the most recent offseason with some key additions, and they're leading the National League Central right now. I think the Cubs will catch them and pass them, but that's a pretty exciting division, and it's an exciting, young, again, aggressive baseball team that's a lot of fun to watch. And, of course, you've still got the Shohei Ohtani, Mike Trout combo out there in Los Angeles. Also, that's must-see TV when those guys are playing, which causes some late nights around the Melvin household. Occasionally the missus is not real fond of those 10 o'clock National League West Coast starts. But we watch them anyway. On the book front, I'm going to pick out one that you got to read, Star of the North by D.B. John. It's a new release, just came out. It's a novel set in modern-day North Korea. No, I'm sorry, not modern day, about 10 years ago, North Korea. It's fiction. It's a political thriller. Wow, what a story. The guy's really done his homework. It's well written, well researched, and just a very pleasant read that also throws some light into exactly what goes on behind those closed walls there in North Korea. Lawrence DeMaria finally had a new book out. In the Jake Scarn series. He's a former financial writer, very talented writer, has 2 different book series going. They're both fantastic. Make sure that you look for that one. Alex Cava's newest in the Rider series is out. I liked that as well. Looming Towers. If you haven't seen the series on Hulu, that's a great watch. But the book that inspired the series, nonfiction, about our involvement in the Middle East, about radical Islam and the days leading up to 9/11 and the total lack of communication between the FBI and the CIA. Really good, informative read. I think you'll enjoy that one as well. So, anyway, what else we have? Well, that's about it really for me this week. We're packing up around here, getting ready. We're going down to Texas to some place called the Frio River. Near San Antonio, out in the hill country. Looks to be beautiful. It's going to be over 100 degrees every single day. So we're going to load that Kindle up with just as much stuff as we can get. We're going to give ourselves some work assignments for the week so that we've got excuses. Maybe stay inside in the air conditioner a little longer on some of those days. But it should be great. The wife's whole family is going to be there. The kids will get there, run around the Texas Hill Country. It should be a very fun week. Now that does mean you will get if you're a subscriber, and you should be a subscriber, you will get a weekly update this Thursday and a buy list and a reading list. But next week, to be Publisher's Holiday, when I'm off with the family, we tend to try to set some of the work stuff aside. I monitor everything. We'll be keeping an eye on it. If we get takeover news, meaningful market moving news, you'll hear from me. But if we don't, then you won't, because I'll be down getting my Texas on. So anyway, we'll talk to you guys in a couple of weeks then. Enjoy the beginning of what hopes to be a fantastic summer.